we have someone from Accel Partners. It's an investment firm many of you might have heard about. We have the CTO of IBM India and the head of the research, IBM India research as well, and Sandeep from Zebpay, who is leading the largest Bitcoin exchange here. So we wanted to bring in different voices for you to be able to ask questions to. So I will be, throughout this process, taking audience questions throughout the process. So I want you guys to think, and if your question, for example, is relevant to this group, please keep it in mind. All right, let's get started. I'd like each of you to talk about who you are and your firms or your exchanges experiments with the blockchain. So just tell your story and how you have been working with and interfacing with blockchain. We can go in order from Sandeep down.
Sure. So hi. So we are a cryptocurrency exchange, and we started Zebpay with the mission to kind of simplify cryptocurrency so that 1 billion Indians could kind of adopt it. So the way we use the blockchain is to do transactions, cryptocurrency transactions on the blockchain. Really, that's how we use the blockchain.
Okay.
So Accel Partners is a 10-year-old VC firm in India. It's a 30-year-old firm worldwide, but in India it got established in 2007-8. So over the last 10 years, Accel has invested in 100 plus companies. We've been fortunate to work with companies such as Flipkart, Myntra, Ola, BookMyShow, PropTiger, Urban Clap, good set of names. A lot of companies who have started new trends in India. So that's the thing. In terms of blockchain, I think I'll give a slightly longer answer for that.
Okay.
So just so that it sets the context from where Accel sees the whole industry. So if you look at the last 10 years in which Accel has put in, they invested the money, but if you look at the whole Indian ecosystem, 35,000 new companies got started, which in turn have raised in all, I think, excess of $30 million. Right? So a lot of new companies have started. So, if you look at that holistically, really India has always been an entrepreneurial country, but in the high-tech area also what we are seeing increasingly that the entrepreneurship is spreading, right? So we are becoming more and more entrepreneurial. And right now, if you look at it, the trend the last 10 years was started by mobile phones, right? Really, the smartphones got started. So that was the first wave. Right now, we're in the midst of the second wave, which got started really by it's a fintech wave, and got started by what's called India Stack. And India Stack, as you know, was the foundation of India Stack is Aadhaar, which is a digital presence-less identity. Right? So I think that's where the second, wave got started. Of course, on top of the Aadhaar, the IMPS and UPI, the payment layer got built, and which is now making the fintech revolution to take off. So the question, when we look at a blockchain, the question really comes to our mind is, what is the next wave that will, get started? There are many contenders. There's obviously IoT, which is actually doing it. There's AI and ML, which is actually, contributing to that. I think in that bucket, blockchain also plays a role. I'll talk more about it as we go along.
Sure.
So my role is to run the research lab for IBM in India. We have 12 labs globally, and I run the lab here in India. From a blockchain perspective, many of us got started very much like Garrett playing with Bitcoin. But our perspective very soon changed. And again, your perspective changes with the lens that you wear and what you see in the market. So we quickly realized that for us, the blockchain was an idea about infusing trust into business networks. We've always struggled with this issue that you can think about whatever you do as a consumer. You transfer money, you order a piece of good, you go to a retailer and buy a packet of food. If you sort of step back and think about all the entities that were involved in making that happen to you, they are always networks. There's almost nothing where you might think you're transacting with Amazon, you're transacting with a bank, or you're transacting with the retailer, but really the transaction really spans many, many business networks. And if you step back and think about it, one of the biggest inefficiencies in these business networks has been because of trust. Trust requires, therefore, the only way we know how to deal with trust has been to deal with reconciliation, deal with complex regulations, deal with a lot of processes just to make sure that in business networks, people are doing what they're doing. So we said, I think to us, the aha moment was to realize that the underpinnings of what was demonstrated by Bitcoin, not that way, but differently imagined, becomes a platform to really build trusted transactions in business networks. And what we've been doing over the last, 24 plus months is really working with clients, 400 plus clients in I think every industry you can probably think of, to understand what the fundamental idea of introducing trust in business networks means. And again, when we get to, I'll talk about specific examples, and if you're going to wear a government lens, we'll talk about public sector examples.
Great.
But to us, trust is the key word.
Awesome. I actually like what you just said. Trust is a keyword for you. Can we have each of your keywords, either one or two words, on your favorite feature of the blockchain?
So rather than a favorite feature of the blockchain, I would like to say that the way trust is infused in the blockchain is when it's powered by a token associated with the blockchain, which has a public value, which is a cryptocurrency. So we kind of say that cryptocurrency is the first application of the blockchain. I believe it's the other way around. I believe cryptocurrencies is what powers blockchain and gives that element of trust.
As a reward mechanism. And we heard that from Garrett as well, even with Energy Web.
Absolutely.
Yeah. Very interesting. Okay. And I'll just go ahead and introduce myself. In order, my name is Anshul Bhagi. I'm working with Sinchan over there. We co-founded Proffer. It's a blockchain protocol with emerging markets focus. We'll tell you more about that later. But I'm very excited to be on this panel. And the focus for this panel is going to be on how blockchain can get beyond whether cryptocurrency is the first use case of it or what powers it, can look beyond cryptocurrency, Bitcoin, as well as the thousands of other tokens out there at making a difference to the Indian economy. So that's what this is about. So please think of your questions. We would love to crowdsource some questions as well. So in the spirit of the name of the panel, I'd like to give each of you a chance to share your vision for how the blockchain can drive the Indian economy and why your firm has, in your case, made so much of an investment in that field. So we can start with you, Sriram, and go down.
Sure.
Yep.
I'll go back to what I said before. In many of in mature economies, you already have business networks established. They existed, they adopted digital technology before anything called blockchain existed. So in some respects, then, to have blockchain in some of these emerging economies, you have to do a rip and replace. You have to make an argument for why a logistics network or a supply chain network or a health record management system or something else has to throw away what it is using today and insert blockchain. To me, very much like what happened in emerging economies like India, where when we decided to connect people, we said, hey, we don't have to lay cables, we'll just use mobile. Likewise, as we start to really digitize business networks in India, I think we have the opportunity to adopt blockchain from the get-go as opposed to doing rip and replace. So that's sort of the foundation for why we are very, very excited. As a case in point, one of the areas where we're doing a lot of work right here in India is we talked a lot about supply chain, and I'm actually very glad that your fearless volunteer actually talked about supply chain. There are many elements of supply chain, from logistics to financing to provenance, which is what she was talking about, that are going to be completely transformed by blockchain. One very timely example in India is the following. If you think about the statistics of how much financing of small and medium enterprises happens, and these are the companies that supply to the big companies, or the companies that supply to the companies that supply to the big companies, right? Though there are very many in India. If you look at the penetration of financing, that is about 1.5% to 2% in India. In almost every mature economy, that is upwards of 12% as a function of GDP. So now, one of the fundamental reasons why the penetration is so low is that it's an issue of trust. Banks don't know how to give financing to a provider that they don't know anything about. It's easier to give financing to IIT Delhi or to IBM or to a big company. But if you are a nobody who are 2 levels down a supply chain, supplying parts to build a building to a big contractor, I don't know you, I don't know how to finance you. So then the only way I know to finance you is to give you a lot of paperwork and overhead and prove 10 times over that you actually supplied the goods and therefore you are eligible for financing. What we are starting to see is that financing companies now want to say, using blockchain, I have better trust, so I can provide faster financing, better terms of financing, new innovative financial products. That's revolutionary in a country like India, where financing of SMEs is going to dramatically change the economy.
Sure. Sriram, can I ask you to talk about how that might work on the blockchain?
Sure. So in that example, what essentially happens, and this is the real version is more complicated, but the toy version is you have 3 kinds of entities in the network. You have the supplier, You have the OEM or the purchaser, you have a financier. Today what happens is the supplier sends goods. Maybe I'm supplying paper napkins to a big company. Now the company says, you supply your napkins, but I'm going to pay you 90 days later. You're a small company. Your biggest pain point is working capital. You can't afford to wait 90 days. But the big companies will tell you, I'll pay you back in 90 days because I clear my bills only that often. So the small companies then goes to the financier and say, look, I have shipped the goods. You can trust it. You can collect money from the big guy. Can you please give me the money today? That's essentially what's called supply chain financing. Depending on the terms, it's called invoice discounting. Now, for the bank to trust to give the money, I have to know the following. I have to know that the paperwork you're showing me is true, that you indeed have actually supplied. If you didn't supply, I'm not going to be able to collect from the big guy. So I have to trust that the big guy received your product, he liked your product, signed off on it, so I make you go through a lot of paperwork. Typically, it'll take you a week to 10 days, sometimes more, with many rounds of paperwork to make it happen. What's happening with blockchain is that loop comes down from like a week and a half to maybe a couple of days and maybe even faster. And if you're talking about working capital, your entire financing period is only 30, 35 days. So in there, a difference between a week and a half and 2 to 3 days is pretty significant. And the only thing blockchain is doing there is essentially mediating trust. So all the operations on delivery, the fact that I signed off, the goods received notice, the invoice, the bill payment, any discount, everything gets recorded in the blockchain. You're leveraging on the immutability and the security where people sign off on the content of the blockchain to provide additional trust. And then the banker uses that trust to give you finance. So that's it.
Thank you for laying that out. I have one other question for you. To what extent is this vision that you're presenting already realized in IBM's case?
So maybe let me take a global perspective.
Sure.
So we did a survey recently, and I'm going to intentionally use the public sector since we're talking about India as a company as opposed to just corporates. We did a survey of about 200 public sector executive leadership from about 16 countries. The survey was done about 6 months back, I believe. As of that point of time, there were 9 out of 10 who believed that they were going to deploy a blockchain network for a public sector use case by 2018. There were 14%, many of whom are working with us, who are actually going to go live in some respects in 2017. So this is already happening. What use case they pick, what they go after tends to vary on the maturity and the use case and so on, but this is happening. This is happening, and I think governments are recognizing the potential. It's a time for India as well.
That's good to hear, and all of you have a chance to push this vision forward as well during this weekend. We'll come back to that theme. Ajay, I'll come to you next. Again, the question is vision for how blockchain might transform the Indian economy.
Sure. So again, I'll go back to where I stopped last time. So if you look at India Stack and how it has helped us, how it has helped Indian economy, especially in the digital payment sector, right? I mean, we've seen a tremendous growth, right? At least 3 or 4x growth since last year. I mean, some of that obviously contributed by other actions that the government took, but the infrastructure was put in place, over the last 7 years. 2010 is when Aadhaar got started. 2017 is we are reaping the benefits. The question really is, what has been done for the financial payment segment? Can it be replicated to other sectors, right? And I think that's where the real, question is: can blockchains, becomes a question. Can blockchains unlock that? Now, if you look at the fintech revolution that has happened, India Stack specifically, it is, again going back to your point, the trust in that system is enforced by the banks. The API is not given to every developer. Only if you are a bank-approved party, only then you can develop that application. So the trust is mediated by an authority, and in that case, a bank, right? Now, if we were to open up that system, if we were to visualize a system, imagine a system where the trust is provided by the system itself, then we can actually imagine that the innovation, we can unleash the innovation, right? Now, in order to do that, really, there are 2 or 3 things we have to do. Number one, we have to make sure that the identity, which is the Aadhaar identity, which is the presence-less identity, somehow gets ported onto the blockchain system, right? Because, I think there are 1.2 million Aadhaar cards now in India. Can can one build a system by which that identity can be used in a decentralized way in a blockchain system? So that's number one. Number two, blockchains actually are, they are transparency machines. They are not privacy machines, right? They're anti-privacy. So what transactions you do, of course you have a private key and a public key, but the transactions that you do are visible to everyone, right? And that's where basically Hyperledger goes and says, let's make it a permissioned blockchain. But the real question there is, in a permissioned blockchain, you lose certain, goodness of the blockchain thought process itself, the paradigm itself. So can the privacy itself be enforced in a way which is open, right? There are concepts like zero knowledge proof and others. Can that be enforced so that we can actually make it an open system, but it can be applicable to lot of things. And then number three, again, if we look at from a governance point of view, the government obviously has policies, right? And we need to make sure that the policies are enforced in a meaningful way in an open system, right? So really, a policy can be a smart contract, but the question really is, before you approve a transaction, can it somehow get run through that policy contract, which is government certified, and which will then make sure that the policies are applied consistently for every transaction, right? I think right now, that does not always happen, right? I mean, the consistency of policy application is something that can be enabled if we have that third part. Yeah. So there are three building blocks in some sense, and I think what I would want to say that some of this discussion has happened with the Niti Aayog people. I think the Niti Aayog itself is very, very supportive of this idea. There's a provisional name given to this thought process called India Chain. And the real question is, can one build an infrastructure layer, call it whatever, India Chain or whatever, which can provide some of these common infrastructure, common pieces of functionality so that many, many developers, third party, independent, can build their own application on top of that. Yeah. So that's, I think, would unleash the innovation.
I think that's very interesting. We're talking about India. I think what you pointed out with Aadhaar, the hard work that's already been done to get 1.2 billion identities, a real government ID system, I think makes India an interesting use case. Yes. For the blockchain. And what you're saying about the leadership we have here and the progressiveness they've demonstrated, yeah. I think that's the second reason why it could be interesting to think about a new digital infrastructure for India. And it's interesting you're using the name India Chain. I think it's...
Yeah, I think so. I think India is ripe for a good experiment. So yep. I think this hackathon will actually help us understand or
absolutely
take the first few steps.
One of the three challenge problems you'll find in the hackathon is very much about government and enterprise infrastructure. So whether the supply chain use case you talked about, Sriram, or using the Aadhaar system that already exists and envisioning a new infrastructure for India Chain, it's a chance for you to show us what that means. Now, Sandeep, I would love to hear your vision for what blockchains can enable, and since you run an exchange, also the role that you would like to play in that process.
So I believe that, just like in the 1990s, the internet would run on the telecom infrastructure. If you want to use the internet, you would have to use that modem, connect to your telephone service provider, and then you would be able to access the internet. And after 20 years, there has been what we call in the industry an infrastructure inversion. The telecom industry now runs on the internet. So, I mean, when you make an international call, that call actually goes on the internet. That's called an infrastructure inversion, which happens. So similarly, when the automobiles were invented, they were used to run on roads which were meant for horses. Now horses run on roads which are meant for automobiles, right? Again, an infrastructure inversion. So similarly, I believe that we will see the same thing with blockchain. Right now, exchanges or products based on blockchain run on the existing financial infrastructure. So for example, if you want to buy cryptocurrencies, you have to use bank transfers to buy from Zebpay. In future, there will be an infrastructure inversion where the banking industry or the financial infrastructure will work on the blockchain. And that's going to happen globally, and that's going to happen in India. So that's my vision. In terms of Ajay was speaking about Aadhaar, and I would like to take a couple of minutes on how blockchain can help in some of these in the India stack. So, in an identity verification system like Aadhaar, there are two aspects in that. The one is the creation of the identity in which Aadhaar is involved. So you kind of go to a booth, kiosk, you identify yourself with some existing papers, and Aadhaar gives you, takes a photograph, says that you are the person whom you are Sandeep Goenka, and gives you an identity card. That's stage one. The second stage is every time you want to use Aadhaar to authenticate yourself, okay, and that's done in two ways right now. One is you do a mobile OTP kind of a transaction. We all know that it's not very secure. It can be hacked, and there are risks associated with. So we kind of use not very critical transactions. We use mobile, OTP. The second is biometrics. We use biometrics. That has its own set of challenges because the Aadhaar centralized entity needs to collect the biometrics of all the citizens, which means you become a honeypot for hacking, right? The creation of identity cannot be solved by blockchain. What blockchain can be used for is the second part, for authorizing yourself as for the identity again and again repeatedly over a period of time. So once the creation of identity is done, rather than having mobile OTP or your biometrics, you could use a public private key mechanism to authorize that that's, you are the person which in the first place, which when you got the identity created. And in the interest of time, I'm not going to kind of elaborate that, but that's the way blockchain can be used.
I think it's very interesting because it fits very well into what the use case you painted, where there's the supply chain payments scenario, where the suppliers, vendors can accrue some sort of a credit history, and you can associate that if you can figure out identity. If you have something like Aadhaar we can build on top of, you can start linking these things. And
in fact, I believe networks will very soon evolve into becoming reputation networks. So today, if you think about this, you're sort of the reputation and the credit decisioning happens outside.
Yep.
I still use outside mechanisms to judge how much credit I give you. I'm just using blockchain to sort of have the trust. But as very soon the data accumulates in the blockchain, that will be the place that I will go to make a decision. Do you supply in general good quality?
Absolutely.
Are you timely? Can I trust you? And the credit decisioning will be driven there. And I think that's going to happen.
Absolutely.
And in fact, that is sort of brings together to Ajay's point. I think very soon we will see coming together of two popular buzzwords today, AI and blockchain, because today blockchain is starting to do process transformation. Once data gathers, people want to do everything they do on AI, start to do that on the blockchain as well. I just wanted to make one other point on the Aadhaar conversation, since that's happened. I think it's important from an India perspective as well. If you think of the one biggest negative that I talked about, a survey that we did, the first negative, and they were all people in the government who talked about what could be the biggest deal breaker for their vision, was lack of regulatory policy being fast enough. So I think this is again an opportunity for India to let not be a deal breaker, as it has been in some other countries that have tried to do asset registration, asset transfer. They've not gone beyond a pilot just because they couldn't get the act together around the policy. So that's something for the country to watch out for.
Sure. So what do you think, Sriram, and the rest of the panel, this ecosystem needs in order to go beyond the pilot stage? Do you have any thoughts on that? Because here we have a lot of people willing to give it a shot. And what does the ecosystem need?
So I think there are many challenges, but one that I think it would be great to have ideas here is, one of the toughest things in blockchain is, as I said, if it's about networks, it's about growing. And if you pick a use case or you pick a scenario where everybody will see value only when the network is large enough, it becomes very hard. Because then you always encounter the question, let the network begin. When it becomes big enough for me to have ROI, whatever that is, I will join. So I think the smartest tricks are going to be to identify those use cases where you can sort of grow the network in smaller units, and things will get better and more efficiencies will come in as they grow. But you don't have to wait to be a billion node network for the folks in there to see value. I think that's key, and that's where the use cases matter. Right. That's one. I think second, going back to regulatory, one way to not be constrained by this ROI is again for the government to come in and incentivize. To be able to say, whether it's the financial players or it's somebody else, to say, I'm going to incentivize you, and the government has many carrots and sticks that they can use to incentivize you to say, I'm going to ask you to adopt this technology. Maybe the numbers don't make sense right now, but eventually this is the right thing for the country, so I'm going to incentivize you to do that. I think those are two important things that I can think of.
Any thoughts from you two about the ecosystem and how we can bring some of these early stage ideas, the pilots, the experiments, to reality? Maybe your views as an investor in this space.
So two parts, right? So investor and non-investor, I guess.
Sure.
So I would start with non-investor first. So I think what we have seen with India Stack, I think we can replicate that. So in the earlier times, and even today actually, governments unleash the innovation by providing infrastructure. Earlier it used to be, and continues to be, but the physical infrastructure, right? The roads, the transportation, the ports, the airports, and the policies around that. I think increasingly we are seeing that the digital infrastructure is equally important, right? So the bandwidth issues have been solved. I think India Stack helped unlock the ability to do financial transactions. I think a supportive regulatory stance of the government and will basically help us build a digital infrastructure, right, which will unleash the next wave. Right? And I think the early experience has been very positive. I mean, I think government has proactively been working with, in some sense, actually some people say, over-aggressively pushing some of the infrastructure, without the proper security mechanisms in place. So I think some of those can be taken into account, and one can build for that. So that's number one. From the investor perspective, I think, in some sense, if you look back, up to 2013 was the time when the Bitcoin was ruling the roost. Around $2 billion of investment went into various Bitcoin startups across the world. 2013 onwards, the tide shifted towards the blockchains. And I think 2013, it went down actually. People stopped investing in Bitcoins because two reasons. One, the growth as it was projected did not happen. The adoption was not as fast as it was anticipated. Number two, and that's important for investors, lack of exits. It's very, very difficult to find, exits, right? Mm-hmm. So I think that became a constraining factor. So the interest went down in the Bitcoin. But the blockchain became the next one. And I think blockchain, the interesting thing happened is that the lot of work that is being done then and even now to now actually, has been in the infrastructure layer. And traditional VCs have been very, there are no models to fund a company which is open sourcing, the technology, right? And I think that's where the ICO stepped in really to help the startups raise the money where they were raising money from the experts, right? People who understood what's happening in the world. And in some senses, we're crowdsourcing, but now over the last year or so, there's a little bit of a, overexcitement that's building up in that space. But I think it's been a good thing that has happened because it has helped infrastructure to rapidly progress. What we saw in the AI ML space, completely dominated by the behemoths, right? The Googles of the world, the Amazons of the world, the large companies are building the infrastructure. In the blockchain world, thankfully, that's not happening. Thankfully, because of the ICOs, we are seeing a lot of interesting, innovative companies raising the right amount of capital, actually excess capital often, but building the systems, building the platforms. So I think that's great. From a traditional VC, and Accel is still, I would say traditional VC, I think the real value can be provided in a couple of ways. Number one, in all the companies, the team is the most important. The teams make or break a company. So I think making sure the right team is in place. Number two, I think when the business starts growing, how do you really grow the business? How do you, how do you acquire the customers? How do you get the right connects happen? I think that's where the VCs can play a role. So I think the whole ICO adjustment is still happening in the traditional VC world. But I think once the companies start crossing a certain stage, clearly, traditional VCs can contribute to the growth.
Ajay, I want to build on top of one thing you said. So you use the word infrastructure quite a bit. And I think that's very interesting because in this space, even if you look at ICOs, there's two large types. There's the infrastructure level ones we call protocols, and then there's the applications. And even you as hackers participating here will have a chance to either build infrastructure level stuff, the protocols, or you'll build what are called dApps on top of that. And I think what I hear Ajay saying is that, and all of you, is that for this ecosystem to really come to where we can start bringing these pilots to fruition faster, we need to build out that infrastructure layer. In other words, what this means for all of you is that it might be very interesting to think about what are the core protocols, very much like the internet. You drew a comparison to the internet, or like TCP/IP enabling all sorts of things on top of it, or email enabling a number of different apps on top of it. What kinds of protocols can you build on the blockchain that enable others to build applications on top of it? So just one distinction I wanted to make. I'd like to take an audience question now. I'm sure you have it. And here you can address either an individual or you can ask the entire panel. So red shirt, yep.
So I'll go first. It's an excellent point, and I think I want to connect it to what Anshul said. I think there is an opportunity to build a lot of interesting protocols that address a lot of these problems. And there are different levels of privacy and confidentiality that different use cases are going to demand. There is a level of privacy and confidentiality that says, even though I'm in a network, I shouldn't even be, it's okay for me to tell that you and Anshul are transacting, but I can't see what you're doing. Or there may be a level that says, I shouldn't be able to discover that you and Anshul are even transacting at all. There are use cases where, for example, people are looking at shared infrastructure where I've already proved to you who I am. I'm now trying to run a business with him. I don't want to have to go through the trouble of proving all that again with him. I want to give you permission to selectively share what he wants to know about me. Maybe all he needs is my address and birth date. You've already verified it. So I wanted to be able to share it to him, but I don't want him to know that you and I have a relationship, and you don't want to know that he and I are going to have a relationship. So now the people are doing a lot of innovation, and that's an example of the class of protocols that remain to be built.
Yeah.
And even in the identity space, I think a lot of the discussion we've seen on Aadhaar and this, I think attestation, verification, consent management, there's a lot of innovation. We use blockchain as a infrastructure, but then a protocol innovation opportunities exist.
I just want to add on before we go to Sandeep's answer here. You'll find that the question you asked is relevant to more than just supply chain. Like health records is another very popular one right now where it doesn't make sense to reveal everyone's data. Now, the fact is we often talk about data on blockchain, but data isn't stored on blockchain. It's verified on blockchain, like hashes can be stored on blockchain, or you can have architectures where you store the access permissions on the blockchain, but the data is stored off-chain. And what I want to tell you is you should go check out these papers that we have linked to from our site. In the challenge problem section on health records, smart property, all of this is not trying to put data on the blockchain so everyone can see it equally. There are ways to permission it, to have access controls, and the architectures presented in these papers are very interesting. A lot of them from MIT's Digital Currency Initiative. So check that out. Very interesting stuff, and we would love to see you working on it. So sorry for taking your answer away. Go for it. And if you can repeat the question that you're answering as well, that'd be good.
So just absolutely. So when I meant that creating the identity, I meant that blockchains are not used to store data. They're more useful for authorizing and verifying data. And so you asked, so the question was that in case of, I think in case of Aadhaar, you were saying that if you would lose, your private key to your public address, how would you use your Aadhaar identification, So that's actually quite simple. So for example, right now your mobile number is attached to your Aadhaar card. And if you lose your mobile number, what do you have to do? You have to kind of go back to the Aadhaar booth or kiosk, prove from somewhere else that this is who you are, and you want to change your mobile number and you want to get another mobile because you do not have access to the previous mobile number. And that's the reason they've got biometrics, because biometrics, you're not going to lose it. But it has another challenge of getting hacked. So similarly, if you lose the private keys to the public address that was associated with your Aadhaar card, you kind of go back, you prove to the Aadhaar booth that it's who, and you want to you've lost the access to your previous public address, and now you want to link the new one. That's the only way that's what's going to be possible.
And actually, that's what I was referring to when I said map Aadhaar identity to a decentralized identity. How do you do that so that you can do this process of, even if you lose it, how do you regenerate and relink it back to that? I think that's part of the problem.
Okay, great. And so just as a closing thought, I want each of you to very quickly present a challenge problem to our hackers and our audience that they can work on this weekend. One challenge problem. Anyone can start.
Okay, I can give you one, actually, many. If you look at blockchain as a place where people are going to do secure data exchange, at some level, that's what's happening. We talked about the difficulty of growing networks, right? So one of the challenge problems I like to put in front of people is, can you build into a protocol interesting economic incentive models that take into account what value you are bringing to the network? For example, in the example that I said, you have a set of people who are trying to reduce the friction involved in proving your identity. I've already done it with one person. I'm going to let you share it. Now, what if I have 100,000 customers, he has 10 customers. Overall, I'm going to be providing value a lot more to him than him to me, because chances are he's not going to have a customer I have. Most of the time, I'm going to save his KYC process. He's not going to help me much. Now, what are the economic incentive mechanisms that still allow us to participate in the network and still grow the network? So, and I think for those who are from that kind of background, there is interesting intersections of game theory and blockchain protocols starting to show up. Lots of papers. You can apply game theory at the innards of a Bitcoin protocol. You can apply game theory at a business network level, and love to see a challenge that addresses that.
Great, thank you. Ajay? Or Sandeep, you go ahead.
No, I think, the gentleman from Niti Aayog wanted to ask a question.
I just wanted to ask the panel, one of the fascinating evenings since it has begun. One of the things which many people are grappling is about what is called a job. Like how many people are in jobs. So could the use or the innovative use of this incentivization and actually start measuring how many people are in a job? So while there is a legal definition and classification, but there is literally everybody is into some kind of a job or the other. So the challenge is we're not able to measure with a common unit to classify that as, well, this guy is with a job and that's without a job. How do you think of this issue?
Actually, I don't have a comment. It's a good problem, but I think we'll have to think about that, because it's really a economic incentive problem. I think we do have identities of everyone now. Somehow we have to incentivize so that they disclose, whether they're in a job or not in a job. Once that they do, how do you eliminate people who are faking? I think that's a simpler problem. But I think how do we get them to really tell you problem to be solved, actually?
Yeah, I think it's linked to the crypto economics, the game theoretics that you're talking about, as well as, Sandeep, the very foundation of what you're building as a crypto exchange. I think in the future, if protocols have incentive systems that have tokens backing them, the liquidity for that comes from the product Sandeep is building and will be an essential piece of that stack. Okay, so challenge problem. Ajay or Sandeep, either of you?
I'll go.
Yeah.
So I think one of the challenge problems, I think again a building block really is to provide some kind of a notary service. Right? So if we look at India, we have digital locker, which has been built by India Stack. And if you link your Aadhaar number, if you give your Aadhaar number, and if your passport also has your Aadhaar number and driving license also has Aadhaar number, then they get pulled into it and they are part of your digital locker. Now the question is that, that copy of the driving license is not certified to be authentic. It is pulled in, but it's possible that someone actually hacks and changes some things. So can we build some solution so that copy is provably, certifiably true, right? It's authentic copy and it's not been tampered with. So a more secure digital locker in some sense, where someone notarizes it to say it's an authentic copy. I think that'll be a very interesting problem. So it will be a foundation for many other applications to be built on top of that.
Okay. And Sandeep, you get the last word.
So all the good ideas are taken. So I think it's kind of similar. I think in the India stack, there is one part which is KYC, which is used by multiple financial institutions. All the cryptocurrency exchanges use it. All the users have to do it repeatedly for every bank account. Can it be done once? And in some ways, the hash or something of that KYC process stored on the blockchain, and so every other organization can just verify the hash that you've given has been verified by one government-based organization, and so you don't have to provide all your documents repeatedly. There is an identity risk, there's risk of data leakage, and so on and so forth. So I think something where you can kind of do the KYC process using blockchain, so repeat authentication is not to be done. And that can then be applicable to so many other things like documents and notarized certificates, college certificates, university certificates, and so many other documents.
Great. So everyone, please join me in thanking our panel for their perspectives in this space. Thank you. Thank you all. Yeah.